Welcome back. You're watching Stock Watch with me, Zinati Kuma, and join me to take your stock-related questions tonight are David Shapiro from Sasfin Securities and Deryck Janse van Rensburg from Anchor. Please be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS to 41392 or an X using the hashtag StockWatch. Thank you so much for your time, gents. It's been quite interesting to see the Rand in these times because at some point I think we had reached around about 18 Rand 20, but I actually see now that the Rand is hovering just around 18 exactly to the dollar. Starting with you, David, I mean, what do you make of this? Because, I don't know, it seems like the Rand just doesn't know which direction to go in.
I'm smiling because most of the commentary I've seen pre the election had the Rand down at 1650 or thereabouts, or even improving. And that was on the strength that the US would continue to lower rates, interest rates there would fall and would make other jurisdictions a lot more attractive. That's the last thing that's happening. And in a quick soundbite, I don't, let Deryck comment as well. But I think what's happening is that money is going into the US simply because it's going to outgrow other, certainly Europe, China, and other major economies. So I think money will flow from that point of view. There's a lot of enthusiasm about what's happening. And in the same breath, what might happen is that rates might not be lowered as far as everyone anticipated. So you've got that lift. And I'm a bit reluctant to call the Rand anywhere under 17. I think we probably see the best levels.
Well, I mean, actually, a question related to that is, how much value is there still in SA Inc. under the Trump presidency? Because obviously that's also linked to how weak or how strong the Rand is. Deryck, at this point, I mean, the Rand, as much as it has strengthened slightly from yesterday, it is still at around 18 Rand against the US dollar. What then happens to SA Inc.? Because, I mean, as David says, that, we were hoping that the US would decrease interest rates, but maybe now that might not happen as aggressively as we thought. And then what happens to SA Inc.?
Yeah, so I think the sort of Trump administration market reaction towards it has been negative for emerging markets in general. I think if you just look at global economic growth, as David alluded to, you're most likely going to see, US economy growing quite strongly, but it's going to come at the expense of other economies and in particular emerging markets. So that's what we've seen is obviously quite a big move in money moving into the dollar, and that's obviously translated into some Rand weakness. And more than that, I think that if you just look at SA Inc. or, the basket of SA Inc., I think the best way to describe it is that we've got further headwinds that we need to tackle in order to deliver on some decent earnings here locally. So I think if you just look at SA Inc., it still looks attractive. It still looks okay. It's cheap relative to other emerging markets, but there's some hurdles to cross, some headwinds to tackle, inflationary pressures, more potential tariffs coming through, which come at the expense of our market. So I think the market short term is just rejigging. And there certainly has been some excitement towards that sort of Trump trade or that basket of trade where we've seen big moves in things like cryptocurrency. We've seen some really strong uptick in things like Tesla. And we've seen obviously a bit of downside in some of the emerging markets. So, and you can see it with some of the Tencent results today, which I think were not too bad, but a pretty mediocre response from a market perspective in terms of that result. So, I think it's just going to be a few headwinds and a few hurdles to cross as markets accommodate and climatize themselves to this Trump administration.
Yeah, I'm going to go back to Tencent in just a moment. But obviously, David, when you also think about SA Inc., you think about the banks, you think about the retailers, and particularly with the retailers, I feel like it's been quite a mixed picture that we've been getting from the different retailers. I think you had, is it Truwords coming out and basically talking about the South African market, or the Africa division not doing very well. Yeah.
So nothing, we haven't seen it, all the optimism that surrounded the election, the GNU and better power output and so on. None of that's coming through yet. So I think there's maybe the share prices ran ahead of results. There's a lot of rethinking. I think one of the biggest hurdles we face is China. And China's not kicking in and becoming a bit of a worry. And you're seeing it through in the commodity prices. Growth, certainly in oil, growth from China is not going to drive the oil price. We've seen a massive fall in oil prices. Palladium, platinum are now below $1,000 an ounce, each of those. Copper not going anywhere, and so on. So for us, that's very important. Iron ore hovering around $100 a ton. Yes, we can make money out of that, but we're not growing. And the big concern about that is what it does to our fiscus, what it does in terms of tax receipts here. So we're not the only country that's going to battle. Europe has got to shake itself up. I always call it a historical theme park, and suddenly they've got to kind of hold on a circuit. We've got to weaken China on one hand, and we got tariffs to America on the other. So they've got a lot of rethinking to do and a lot of rebuilding, and just to shake up their ideas.
Yeah, I mean, just on China, Deryck, you spoke about Tencent and the fact that I do realize that there was a slight miss on revenue, but profits actually came out way better than what investors had expected. And you're right, because you would think that would kind of filter through to the share price, and we would see that on Naspers in process. But Naspers in process today are relatively flat, even slightly in the red. Do you think that, maybe the good news was just priced in already?
I think it's more around what's the catalyst looking forward for China. As David said, it's very difficult to kind of forecast what's going to happen under the Trump administration and what the impact of potential tariffs and what those tariffs actually look like. We know that China's been in a very difficult economic position for some time now. They obviously announced quite a decent stimulus package, which was well received, and we saw the prices of Naspers in process respond positively on the back of that. If you just look at sort of a valuation metric on Tencent sitting at about a 15 times multiple, it's looking attractive just from a valuation perspective, but probably cheap for a reason until we start to see the next measures of stimulus coming through, and hopefully with someone like Elon Musk in the picture in the Trump administration, he's got the potential to smooth over the relationship between China and obviously the US. So hopefully that's a kind of a light at the end of the tunnel, and hopefully that just kind of pulls the handbrake on any sort of hard knee-jerk reaction from a tariff perspective. So I think, valuation looks attractive. Surprised that you're getting a sort of muted response out of Naspers in process through the course of today. But, you just need to be patient, see it through. But just kind of looking forward the next 2 years, I think America is probably well placed for some decent further growth, what we've been used to over the last 4 or 5, in fact, over the last 8 to 10 years, to be honest. So that momentum looks like it's probably going to continue.
David?
I read a tweet this morning from Bill Ackman, and it's very interesting. And why I bring it up, it's just reinforcing what Deryck's saying about America. He says that business leaders, even those who never voted for Trump, are giddy with excitement. That's his words. I can't give you the quote because it's not in front of me, but they're giddy with excitement about what lies ahead. And he made the point that when you get confidence, when people feel confident, it unleashes these are my words, entrepreneurial spirits. People want to do things. And he says that M&A, mergers and acquisitions, have been waiting for kind of deregulation or a lowering of regulations. He says that's going to explode. Now, why do I bring it up? I want to bring it up in relation to China, because when you look at confidence there, it's low. And that's a worry. And probably even in South Africa, maybe, when business confidence is low, people hold back. They don't want to do things, when they're not certain of what lies ahead of the future. And that's a difference that we've got between number one economy in the world and number two. And it makes a very big difference. So China's got to get confidence going. You've got to get the consumer confidence. We're seeing low confidence in all those luxury goods and in consumer spending. So it's very important to watch that indicator.
Yeah, it's quite interesting because, we also saw now that Elon Musk and another businessman have been chosen by Trump to head up the new government efficiency department. So it's going to be quite interesting to see what happens there.
They're going to check that. They're going to do. Have you ever seen those people in a firm? I don't know whether Deryck's got it. They go around and they start to see how much paper you've used in the photostat machine and how many spoons of coffee you put in your, how many scoops of coffee and where's the sugar.
And Elon says he's going to put all of that on Twitter. So, all right, Jess, before we head to a break, I quickly want to check on Brait talking about confidence. It seems that confidence has come back on the stock. Of course, we had that big nervousness, I think, earlier on this year when they started on their recapitalization program. But today they came out with results. We did see the share climbing there about 5%. Quite different, quite an interesting picture that you are seeing there with the different investee companies. Deryck, just on Brait and just how it's kind of been on this recovery with the share price, do you think that that is justified?
It's a very difficult one to call, because if you just look at the price action since they did the recent recapitalization, it does look like there's obviously a meaningful buyer building a stake in it. And it just says to me that, you could find that the business is kind of repositioning itself for a potential delisting. If you look at the underlying assets, they don't necessarily excite me that much. So from a valuation perspective, I would tend to steer away and just watch this one play out from the sidelines, to be honest. I mean, I think the recapitalization was under R1 and it's sitting at about R1.85 now. So some significant upside. Are there assets that I want to own? Not really. I think, I'll leave this one to the market to kind of to play it out and watch it from the sidelines, to be honest.
David, you cannot run away from Brait. So here it goes. I don't know. There seemed to be quite a lot of nervousness as well with Brait, that it hasn't really gone anywhere for a long time. And just this recovery that we are seeing, would it be something to spur up any kind of optimism to you or not?
No, Deryck said it. The underlying assets are not the kind that you want to own. They unbundled Premier, which is doing pretty well. It's a decent company. It's been around for many years. I mean, I remember the history. I'm not even going to go into it, but and what have we got there? Virgin Active and New Look. And we're still waiting. New Look, I don't know what New Look do.
It's not doing anything, hey?
Nothing. If you don't know who New Look is, then you certainly don't expect me to know who New Look is. But and Virgin Active, those are, I don't know, gyms are death traps. It's like a Ponzi scheme. You've got to keep selling new memberships just to keep the old people happy on that, because no one ever renews them, and probably 90% of the people who take out new memberships never go to the gym at all. So you've got to keep selling. I just, I've got no insight and no real incentive to go into them.
And the gym landscape is changing, hey? Like, there's so many other smaller gyms, very innovative, that are coming to the market. So, the dynamics there are quite interesting. All right, gents,
Yeah.
let's go into more questions. There's a question here on Investec. It's been looking good in terms of returns, good fundamentals, and quite reasonably priced. Why has there been a lot of insider selling lately? Am I missing something? Is this something, Deryck, that you have seen? Yeah, if there is really insider trading that's happening there? Or insider selling?
No, I can't see anything that's kind of materially going to potentially affect the share price. I think what we do need to recognize is that the performance in the share has been fantastic over the last 12 to 18 months. And obviously, the inception of the GNU, everything has been well received by the banking sector in general. Yes, off its highs, but I think if you just go back 12 to 18 months, they've certainly delivered some good returns. So probably a decent time to start taking a little bit of money off the table. Trump administration coming in, a few headwinds with other economies. Maybe there's kind of some short-term benign consolidation that takes place around these levels. But there's nothing fundamentally that worries me about the business and where it's placed at the moment. I still like the share. It's a really well run bank, and I think they're well positioned. So, if you've got them, I'll probably hold them. But yeah, we'll keep an eye on it. Nothing there to kind of make me raise an eyebrow with a degree of worry, to be honest.
All right. On your side, David, Investec?
Fine. It's from the depths of COVID, and that there's just been a steady increase. And I've got great respect for the new management, who took over from what were iconic figures, the Kossoffs and Ian Cantor and so on. And yet he's changed the whole image. This is Fani Titi, very steady manager. And it's a good, solid bank. Look, conditions don't help them either in the UK or here.
Yeah.
And one's got cognizant of that. It's been very, very difficult, but they haven't done anything silly and gone off in a tandem. So, a pretty decent investment, like most of our other banks. But if you look at the chart, bottom left to top right, you can't fault that.
All right. Well,
45-degree angle, that's fine for me.
All right. Let's go into Boxer. There've actually been many questions on Pick n Pay and Boxer. One says, what do you think of the new details that have come out for Boxer, particularly the target price? So we have seen there going between 42 Rand and 54 Rand. Deryck, your thoughts?
Yeah, I think this is going to be a very exciting, anticipated listing that obviously comes to market now soon. So, that price range, if you look at it, doesn't put it on too much of a demanding multiple. If we just look at it relative to some of the other retail outlets or listed retail shares out there. So I think that they've kind of been fair with the valuation. I would assume that the sort of pricing will get priced closer towards the upper end of the range that you just stipulated. There's going to be a lot of demand for this. And I think that it is going to be very well oversubscribed. I don't anticipate, investors getting full allocations on this pre sort of listing application. And that's probably going to leave a bit in the market where you want to pick up your desired amount of stock that should see some upside beyond the range that you mentioned. So I think it's an exciting business. If you go through the financials, they've got a nice growth profile. Time will tell. It's going to be interesting to see if they can continue the momentum that they've delivered on over the last 2 years, 3 years, if we look forward the next 2 years. But I think it's worth making space if you've got a local portfolio for a listing like this. Be mindful of the metrics and how quickly it kind of moves beyond the range that you mentioned. Fair valuation. If you've got an ability to participate in the IPO, then I would certainly advocate doing so.
It's quite interesting because, we all know that Boxer is a good company, but now coming into the JSE where it's going to be competing with the likes of ShopRite there for investor appetite. David, how do you weigh the two?
Look, it's people get very excited now when something new comes onto the market. What's intriguing is that was already in Pick n Pay. It was there.
Yeah.
But and Pick n Pay's got a market cap now of 19 billion, and if you translate what Box is going to be, I don't know, it's closer to 30. So you say, okay, so what's the value of Pick n Pay? It's a minus number of about 10 billion. So I would certainly go for Boxer and maybe say, okay, on that basis, let's shift out of Pick n Pay, and it gives you an idea of how much work Pick n Pay's got to do to kind of maintain its value. But it's a nice business, well placed at the bottom end of the market. It will be independent and has been independent. So go for it. Don't get over enthusiastic, as Deryck warns.
Yeah.
Sometimes we get carried away, with something that's new.
Yeah, all right. Well, let's go into tech and chips. Why is ASML doing so bad given that they have monopoly over chip machines? Their shares have plummeted since July 2024. Why? Deryck?
I think it's more of a very short-term earnings miss that kind of surprised the market, and we saw the share price come down, quite sharply on the back of that. If you look at the business model, I think it's a very well-run business. I like the business model. It's got a great annuity-type income base. But this is the nature of stocks when you play in the offshore space. They obviously report quarterly, and you come out with a whole range of estimates from a number of analysts out there, and you get what they call a consensus number, and you fall slightly short of that. The market punishes you. It's obviously very short-term of nature. But I think in terms of the business, the products that they deliver, the way that they generate their revenue, I can't fault the business. I just think that, offshore markets have been so strong. You're competing with other, AI chip makers out there that have just been so in the spotlight at the moment and performed extremely well, that they've just fallen slightly out of favor in the short term, a bit of an earnings miss, but I still can't fault the business. I think, if you've got it, you don't want to be selling it. And if there is further weakness, it's probably an opportunity to top up on a few.
David, would you still say that ASML, the fundamentals are basically in contrast with what the share price has been doing?
This is pivotal in the manufacture of chips. If it's almost a monopoly. And Deryck mentioned this was they warned that it was going to be a soft year. I think we'd put too much emphasis on AI, and AI is not a big part of their lives yet. So the other areas of chip manufacture that were sluggish. And remember, there was huge pressure from the US on the supply of their machines, which are highly, highly sophisticated, to China, and they're slowly drawing back on that business, although they say it's normalizing.
Yeah.
In other words, there was a sharp period. But if you want to buy a stock, you can buy this one. It's not going to let you down, and superb technology. It's the leader. It's the pyramid in tech industry, in the whole supply chain. Everything comes below it.
All right, gents, let us get to your stock picks for today. Deryck, what are you picking?
Okay, so I'm going to go a little bit counter trend to what we've seen in the market of late. Obviously, commodity prices have been quite soft, and we're facing some headwinds in the very short term with the announcement of the new Trump administration. I still think gold looks quite interesting, hovering around this sort of 2.6, above that 2.6 level. To me, it looks like that sort of gold trend is still intact. And on the back of that, we've had some significant downside if you just look at our gold stocks, Gold Fields, Anglo Gold's Harmony. So my stock pick today is Harmony. It's come off quite sharply from its recent highs. The gold price has come off its highs, but I think that the downside that we've seen in some of these gold stocks is a little bit overreactive to what we've seen in the gold price. So provided we continue to see the uptrend stay intact in gold, I think the gold stocks look quite interesting. And within that space, I still think, my stock pick will be Harmony Gold.
All right. David, on your side, what are you choosing?
I'm going with Mr. Ackman. And I can't find anything fresh. I've got, something new. I don't want to just keep repeating what we've said over, what I keep saying every week, sometimes twice a week. But I'm very positive on the US. And I think that the S&P as just a proxy for the underlying market, I think you're going to see plus 10% over the next year. It could even be more. So if you want to buy just the ETF, that covers it or tracks it, just go for the S&P. I think it'll lead. I would like to buy an individual stock, but I can't think, it's too early in the day.
All right. Thank you so much, Janse, for your time and for your analysis today. That is all for tonight's Stock Watcher. Thanks to our guests, David Shapiro from Sasfin Securities and Deryck Janse van Rensburg from Anchor. Up next, The Close. Stay tuned.